Alright, so this is really moving into the part 2 or into stock watch list number 2, which is titled technology. Although it isn't 100% full of technology stocks, doesn't really matter. So what we'll do anyway, we'll take a look at this top 10 individual trade list. We'll maybe move into the next watch list. We'll see how time progresses throughout this video, and we'll just speak about some really nice trade opportunities on these individual shares. eBay is the first one which we'll do. So eBay, we had this bullish entry at 56.35. We also have a bearish entry at 54.11. We do not have, or we have not triggered either of those two orders yet. Very close to triggering on Wednesday's trading session. I did believe we would after Tuesday's bullish candlestick. You can see if I just zoom in on the detail, we did have a really nice candlestick on Tuesday, but really today, as of Wednesday, we had a bearish Morobozu engulfing candlestick. So it really negated all of the price action on Tuesday. The good thing is that we didn't get triggered at 56.35, but I now even have more confidence in this bullish trigger. This could be, as I just alluded to in a previous video, simply a retest of this old resistance level which we battled for the better part of an entire year. So you can see we've come down, we've retraced, we've got a lot of buying pressure, as you can see in this lower candlestick right here. And right now this is the location where you'd expect to bounce and at least trade up to $59 a share, or even breaking out above that and beginning to trend up until really $63 a share or even higher. So eBay is definitely one to keep on your radar and on your watch list. You can see our basic setup. It doesn't matter which way it moves, but it is fascinating either way it does decide to break out. Facebook, moving on, did trigger today. We had a little jump up to 63.33. We are in this bullish trade on Facebook. In the face of such a bearish price move, it doesn't really matter. We did close the window, or almost close the window, which is good. Good volume coming back into Facebook. If you are in this trade, set your stop below support, either there or right here about $60 a share. Target is all the way up at $72 a share on Facebook. What do we have also? We've got GILD, which is quite interesting. Really nice bracket trade, 67.21, 78.95. We're still quite away from those triggers. The same with IRM, 26.53, 29.24. We're trading here at $28.11. We're in between a resistance level and also a support level. So there's really not a lot to talk about in the way of trade opportunities until we break out above or break down below this little bit of a sideways chop fest or sideways moving type of trade. Here's MA. MA is quite interesting. Came down to support. You can see the basic bracket trade again. We're remaining very disciplined. And simply, there's just no trade set up on MA. We are back into that old resistance level, which was once support. So you could say from a pure chart, sort of technical perspective anyway, that we've simply broken down below this little triple top almost, and we could be coming up to retest that old neckline before we fail. However, there's not enough early reversal candlesticks. We do have a spinning top and a little bit of a bearish gap up or bearish counter attack. It's not enough to be net short at the moment. We could be bouncing and finding resistance off that 10, that 20, that 50. But with the market looking so bullish, it wouldn't surprise me if we came up just a little bit higher, established that upper sort of range, and then we get that initial sell-off lower. So MA is developing, it's not there yet, or MasterCard's developing, sorry, but it's not there yet. MU, however, is on the precipice really of breaking out above 26.13. We've had this set up for the better part of 2 months, moving into 3 months. Hasn't occurred yet, but when it does, it's going to be a really, really good move. We do have earnings coming up, so I really hope that doesn't mess the individual trade setup. And it even looks like it's coming out on Thursday's trading session. So please do not have any open orders. Wait for earnings to be announced and then trade the gap. All right, trade in the continuation of the open window, whichever window or whichever direction that open window is. Tesla, not a whole lot to talk about. It has filled that open window. So you can see how it acts as resistance. And now we're simply starting to bounce. Is there a good trade setup? No, not really. We are bouncing off the 50. But really the risk reward is already broken down if you're not in any Tesla positions at the moment. Twitter again looks to be moving lower. Really nice bearish engulfing. So what I can do is, our initial bearish entry was 48.79. I'm going to simply move this down to about $43.07 at the moment. That'll just be a trend continuation down to support about $39 on Twitter. Let's move on to Yahoo. Yahoo's just chilling. Again, in the middle of nowhere. A lot of these shares aren't set up, and it's sort of like, if it doesn't make sense to you to trade in one direction or another, and that's, especially if you're a professional and you know what you're doing, then the majority of other people looking at a share are just going to be even more confused. And if you are confused, or if you ever find yourself doubting the original analysis or not coming to some conclusion of future price direction easily, well, then it's something you just need to skip. And Yahoo is something that you should be looking at skipping. We did get a breakdown below our initial entry a couple of weeks ago, but it hasn't really played out in the sort of the direction we wanted it to go. We were looking at a 34.50 ultimate target on Yahoo. We didn't hit it, so we've just reset it up at 34.19, and the bullish one is just above these all-time highs at resistance levels. Earnings is coming up also, so it is going to beat us to the actual trade. Zinger again looking to move lower. We've got textbook engulfing patterns, we've got shooting star patterns, we've got inside day, we've got bearish harami patterns, and this just looks weak. It looks very sick, it looks ill, and it's not something you want to be looking at through any bullish perspective, at least not as of today, right? There's nothing bullish about Zinger other than the fact that we're coming close to support down here at $4.11. So that's just an update of these individual 10 shares in the technology folder. The majority are bar, what are we looking at? I think MU, MA, and IRM. So my apologies for that, but it doesn't matter. It doesn't change the way that we trade these individual shares. All the best, everyone. I'll catch you later on in the week for some more additional share analysis. Goodbye.